India's central bank just said something that sounds like a final verdict. They praised blockchain as revolutionary because it proved you can transfer money between unknown people without any intermediary. But then they said Bitcoin itself has no intrinsic value. Not money, not commodity, not a financial asset, just a price. Because someone is willing to pay, and they compared it to Tulip Mania. Now here's the problem. If Bitcoin is just tulips, then why is the world's biggest superpower building a strategic Bitcoin reserve? Why is China still banning it and now explicitly targeting stable coins as well? And why is Russia openly saying Bitcoin is being used in foreign trade? So today we're not doing a Bitcoin price prediction video. We're doing something deeper. How major economies see Bitcoin through the lens of power, control, censorship, and geopolitics. And what that means for Bitcoin's future. Will it become a national asset or remain a global asset no one can control? Let's dive in. Let's address the Tulips argument properly. Tulips were a speculative object with no settlement network behind them. Bitcoin is different. It's not just an object people trade. It's a global settlement system, a protocol that lets value move without needing permission. And that's why central banks don't judge Bitcoin like a stock or a bond. Because Bitcoin isn't trying to be a company. Bitcoin is trying to be something more uncomfortable. A form of money that cannot be stopped and a settlement rail that cannot be censored. That doesn't guarantee price goes up forever, but it explains why governments react so emotionally to Bitcoin. In March 2025, the White House issued an executive order establishing a strategic Bitcoin reserve, starting with Bitcoin already owned by the government through seizures. The language is striking. Bitcoin is capped at 21 million, often called digital gold, and there is a strategic advantage to being early. That's what the White House said. Then came a crypto week style legislation, stablecoin rules, and market structure debates designed to pull crypto activity into a regulated American financial framework. So the US approach is not ban it, it is this: make it legal, make it institutional, and make the deepest liquidity pool sit in America. This is how empires absorb threats. They don't always crush them, they sometimes domesticate them. EU's approach is different. It's not Bitcoin as a strategic reserve. It's Bitcoin is allowed but heavily regulated. Under MiCA, the EU's markets and crypto assets regulation, stablecoin rules began applying mid-2024, and the broader framework applies from December 30, 2024. Europe wants consumer protection, licensing, disclosures, and minimal systemic risk. So EU is not trying to weaponize Bitcoin, EU is trying to contain it. What about India? India's central bank stance is consistent. They worry about financial stability, monetary sovereignty, and illicit flows. This week, RBI's deputy governor again warned about stable coins and crypto risks, dismissing claims of utility beyond what fiat already provides. Notice the pattern. India is not saying technology is useless. They are saying we want the technology without losing control. That is exactly why central banks prefer CBDCs. Same digital efficiency, but with state authority. And China is the clearest case. In 2021, regulators imposed a blanket ban on crypto transactions and intensified the crackdown. And in late 2025, China's central bank reaffirmed the crackdown again, flagging stablecoins specifically as a risk for AML and unauthorized cross-border transfers. That tells you the real issue. Bitcoin isn't banned because it's volatile. Bitcoin is banned because it's a hole in the wall of capital controls. Russia's posture is pragmatic. Reuters reported Russia has started using Bitcoin and other crypto for international trade under a special legal regime, largely in response to sanctions and payment blockages. So Russia views Bitcoin less like digital gold and more like a payment workaround when the traditional system is hostile. This is where Bitcoin becomes geopolitical without even trying. Let's simplify. Governments resist Bitcoin and stablecoins for three reasons. Number one, monetary sovereignty. If citizens can move value outside the banking system, central banks lose control over credit transmission. Number two, capital controls. Bitcoin and stablecoins are portable. That scares countries that rely on restricting outflows. China is the best example. Sanctions and censorship power. The modern financial system is full of choke points. Bitcoin weakens choke points. Now here's the twist. The US is also building stablecoin rules because stablecoins can become a digital extension of the dollar globally. Meaning stablecoins can strengthen US dollar reach even while Bitcoin remains neutral. So you can end up with something like this. Stablecoins is a national power tool and Bitcoin becomes a global neutral collateral. Now let's connect with dollar weakness, debt, and global liquidity. Bitcoin is not priced like a normal asset. In practice, it often trades like a global liquidity barometer. When money supply expands, when real yields fall, when liquidity rises, Bitcoin tends to benefit. And the macro backdrop is obvious. Global debt and deficits are structurally rising. Financial systems are increasingly fragile. Central banks keep talking tough, but crisis cycles keep forcing liquidity back into the system. That creates a world where hard assets, gold and potentially Bitcoin, regain narrative power. Not because they generate cash flow, but because they're alternatives when confidence in fiat erodes. So, does the US legislation and the US Reserve turn Bitcoin into an American asset feared by most people? Here's my view. The network cannot be nationalized. It's global, permissionless, and borderless. But the financialization can be dominated. Meaning Bitcoin can remain a global asset while America becomes the biggest hub for custody, ETFs, derivatives, market structure, and liquidity. And if that happens, the world may not live inside Bitcoin, but the world may still price Bitcoin through American rails. So when RBI says Bitcoin is tulips, I would answer like this. Tulips didn't force every major nation to reveal what they truly believe about money, control, and censorship. Bitcoin did. And that's why the story is only getting started. In the next video, we will connect this directly to money supply, global liquidity cycles, and where Bitcoin sits relative to gold in the next monetary order. If you like this video, like, share, subscribe. See you in the next one.